Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to CEO James Hickman and CFO Judy Happe of Finseta, a leading foreign exchange and international payments platform serving high net worth individuals and small, medium-sized businesses. So welcome, guys.
Hi, Paul.
Yeah, well, big congrats on today's strong year-end trading update with adjusted EBITDA coming in at £2 million on the back of a 26% increase in revenues to £11.4 million. But before we sort of dig into the details there, James, I don't suppose you could just quickly remind the audience the company's sort of core USPs in this sort of fast-moving sector.
Yeah, absolutely. Finseta is predominantly a payments and currency exchange business. We also provide e-banking services, and that means each and every client gets their own virtual IBAN. We built this all on in-house technology. Our strategy is very much to create a global payment network to allow our customers to pay in and out all over the world. What is slightly different about our business compared to competitors is that we service both high net worth individuals and also businesses. There is a clear distinction there, but we service both sectors of the market. We sort of liken ourselves to a private bank in terms of the service we offer. So each and every customer gets a dedicated account manager, for example. We're not just an online platform, which is very much where the market has gone over the last few years. This very much plays into the hands of our strategy. Again, another differentiation is the way we acquire customers. We acquire all of our customers through a growing introducer network. And introducers will be accountants, lawyers, property agents, and such like. And as I say, all of our customers come through that channel.
Yeah, just a few years ago, just as an example, to give as an illustration for people, when I pushed some money abroad through one of the high street banks, and it was about the speed of like using a carrier pigeon, and it was sort of like 2 or 3%, if I remember rightly. What's a sort of like what sort of benefit would I get if I came through Finseta?
I mean, ultimately, speed is absolutely critical. So you know, payments certainly same day, quite often within minutes. As I say, we offer a dedicated service to each and every customer. So customers can choose how they want to interact with us, whether that's online. Customers sometimes don't want to talk to anyone and they just want to self-serve on the platform. They're also able to call up and speak to their dedicated account manager. And in certain circumstances, we have customers that come into the office. Admittedly, few and far between, but it does happen. So we're very much agnostic, and we ultimately want the customer to choose how they want to interact with us and what suits them the best.
Yeah, well, I'm going to give up on that carrier pigeon next time. Okay, then, Judy, just moving on to the financials, can you just take us through the highlights, to say, of the top line growth, the increase in gross margins, and the cash generation?
Sure. Yeah, so I'll step through working from the top down as I normally do. So headline revenue growth of 19% to 11.4 million, up from 9.6 in the prior year. However, that importantly, on a like-for-like basis, the growth is 26%. So that kind of adjustments out are the end of the white label business, which we fully offboarded at the end of 2023, and also some licensing revenue that we got as a result of the disposal of one of our subsidiaries last year, in 2023. So like-for-like in those numbers, headline growth of 26%. That's driven largely by a 17% growth in customer numbers. So it's a really important metric. Gone over that 1,000 customer mark during the year. 1,059 customers traded during 2024. Again, driven by that introducer network, that go-to-market strategy that is the kind of force multiplier. So again, we should see that further expand even within the introducers that we onboarded in 2024 into the coming years. I don't want to shirk away from it because people will do their own maths, and you will see that H2 2024 on a headline basis shows a modest growth of only 5%. again, making those same like-for-like adjustments is actually more like 10%. We have, I would say, as a business, we did have a disappointing month within the last quarter, and effectively a lot of that is timing differences. We've had an absolutely storming start to 2025. I appreciate I win no prizes by saying we're having a great January, but we have broke internal records across the board: best revenue days, best revenue weeks, biggest trades, etc., etc. So it is very much confirming that view of James and I, certainly not a trend, a one-off, and we're really seeing that reverse and feeling the benefits already in 2025. As you've already mentioned, gross margin improvement 65.5%, up nearly 2 percentage points year over year. Again, we've headlined this quite a lot previously, but that's really driven by that change in white label business, so being offboarded during finally at the end of 2023. None of that which carries the high pay away. I will just say, looking to the future, we're not going to continue to see that kind of 2 percentage points step up. This is probably around about as toppy as it gets right now. As we look to see some of our new jurisdictions become revenue generating and generating more to the overall mix, they will be a drag initially on that margin, just as you kind of get a tail with a more established pipeline of people that don't attract revenue. So you might have salespeople that leave, no longer have to pay that commission, might have IBs that move on. So you get a tail which keeps your overall margin high. You don't get that in jurisdictions. Adjusted EBITDA, you've already mentioned, improving to 2 million at a margin of 18%. Again, we've talked about this before, but it's absolutely fair to say that that's been pulled down by those investments in the areas where we've yet to see full commercial release. So Heads for Canada, card program, Dubai, and also in terms of a kind of a non-headcount related cost base, we've invested heavily in our compliance technology to support the kind of global rollout and multi-product faceted rollout that we're about to see in 2025. So I think in terms of P&L, those are the key metrics that I wanted to draw out.
Yeah, and just that's the slower month in that final quarter. Is that anything to do with the budget, or what was the sort of the underlying reason for the slow?
Yeah. In terms of timing.
In terms of timing, Paul, it was maybe coincidental, but yes, quite possible.
Right.
Ultimately, with any transactional type business, and actually we've got a very good visibility of pipeline, timing always can be uncertain. So, and particularly when there's specific news events or things going on a macroeconomic basis. Ultimately, we know customers want to trade, they have a need to trade. So this is not one thing to point out to the audience. We're non-speculative. So this is very much for products and services. People do an FX transaction and then transfer the money. So it is very much for specific, whether it's a property purchase, whether it's paying an invoice, etc. So that we know the requirement. It's just a timing issue, and ultimately we would have loved to sort of have everything in 2024 and absolutely spectacular numbers, but that's something we can't control. But as Judy mentioned, we've had an outstanding start to the year, and some of those trades are obviously sort of hangovers, if you like, from last year.
Yeah. And then just on the investments there, Judy, obviously you've put in a lot of infrastructure this year in terms of the regulation, compliance and all this sort of stuff, and expansion. Is there how much additional sort of investment needs to be made into 2025? Because you're presumably going to get some economies of scale coming through as the top line increases.
For sure, that's exactly right, Paul. So we're pretty well set, I would say, from a compliance technology support that's well established now. Huge economies of scale to drive out of that. We've kind of talked about some of those benefits previously. It's fair to say that effectively in terms of headcount additions, other than selfishly having extra money for the finance team. They're all going to be sales related, so all revenue driven, as you would expect. So we really will see that those kind of operating leverage increase and sweating those assets. I think you're maybe leading into some of the cash flow impacts as well. So I'll briefly touch on that if that's okay. So we did see we did spend 1.5 million in capital related items during 2024. That included 300k in relation to the card program, so setting up the infrastructure in that, and some investments in our existing FX and payments platform. I think James will perhaps go on to talk about some of those, but adding real feature benefits that will benefit future years. And obviously, card program will be launched imminently. So it really was, I'd say, a one-off capex heavy year. We'll typically see that revert to around about 0.8 million. So it was almost double, I'd say, what we see in an ordinary year. Really setting ourselves up and continuing that theme of investment, with benefiting further years.
Yeah, and I'm guessing as you grow, Judy, you seem to be pretty working capital light, so you don't need to invest a shed load into debtors and stock and this sort of stuff. You seem to, in fact, if anything, you seem to be pretty neutral.
Absolutely, that's absolutely correct. We've actually seen a very small working capital inflow during the year. So, notwithstanding the huge growth that we've seen over the last number of years, you would expect us to be working capital consumptive. That's absolutely not the case. So over 100% conversion margin, so operating cash flow of 2.2 million in the year compared to the adjusted EBITDA of 2 million. Really, really strong cash conversion, and that's something we'll definitely see continue in the future.
Yeah, well, that's a brilliant segue then, James, to get into the top line. Can you give us an update on the sort of the commercialized strategy for sort of the international side and the sort of increased sort of sales heads count? Because obviously, the more you put in, the bigger the profits, and you don't need that much working capital either.
Yeah, absolutely. So just as a reminder, our strategy is three-pronged. Very, very simple and straightforward. One, expanding our geographic and market footprint. Secondly, product enhancement and enhancing our product capability. And third, we've labelled future-proofing the business, which is more about diversification and ultimately building a sustainable long-term payments business. So progress in 2024 has been significant. Dubai, we have now received pre-approval, which we're delighted with. Ultimately, the regulator in Dubai, we're now just waiting for the full approval, which we're extremely hopeful that it will be imminent. So that has been obviously a significant amount of work. Getting regulated anywhere in the world is not easy these days, and actually brings significant value within the business day one. But we already have an office. We've made a couple of key hires over there in 2024. So we have an excellent pipeline, and we're really, really excited about the potential in Dubai. One of the critical things with setting up any international business is creating value with a geographical expansion is having the local banking and the local banking presence there, which ultimately allows the faster payments, the local payments, and that's a critical thing. And we've done that successfully as well. So I'm really, really pleased with progress, and we would expect to announce something imminently with that. On Canada, obviously we're regulated there. We've now set up an office there. We've again made another revenue-based hire, and to build out that pipeline. A lot of the integration work is completed, and we expect for sort of first trades and revenue flowing through the system in February, so next month. So again, an awful lot of work has gone into the setup by the team. These things, the amount of work cannot be underestimated. So they've done really, really well. But we're sort of if you like, at the end of that journey now. So looking forward to turning on the taps, as it were, and I'm sure Judy's looking forward to seeing the revenue flow.
After all that hard work, it's definitely good for it. Now, just in terms of the products there, James, you mentioned last time we spoke the cards, potentially the solutions, and also mass payments. Any update there at all?
Yeah, mass payments, I'm delighted to say we have launched in the second half of 2024. We've actually got a number of clients already using it, and they tend to be sort of payroll clients or that type of ilk, and it's working really, really well. So we're looking forward to growing that solution and growing that sort of product, if you like, with more customers. In terms of the card product, we're actually using it internally, so we're doing internal testing, and that's been going very, very well. Card programs are notoriously difficult to launch because there's so many moving parts within it. I've done a few of them. They're never simple, but we are, again, the light is at the end of the tunnel here, and we are effectively should be launching full launch. So we've done effectively a soft launch. We're doing a full launch at the beginning of February. Okay.
And anything on solutions at all?
Solutions, yes. So we've actually made a key hire. Title is Head of Alternative Banking, who's already made a massive difference within the business. His job is twofold. One of which is to increase the number of counterparty and payment partners that we have to enable us to pay in and out for more sectors and segments of society, and be geographically in more regions and areas. He's made a significant difference. He's also tasked with bringing on larger opportunities in terms of revenue, which he is doing a fantastic job. So solutions is flying at the moment.
Wow, brilliant. Okay, good. So putting all that together then, Judy, what's the sort of the outlook for 2025? I did see that Shore Capital in its last note had sort of 25% increase in revenues, I think, to 14 something or other, I think it was.
Yeah.
And a big jump in EBITDA to 3.2, which is 60%, I think. But how are you feeling with regards to those estimates out there in the market?
So as James has just mentioned, we're effectively seeing several of our kind of development efforts from 2024 coalesce into revenue generating kind of opportunities for commercialisation at the same time. We do have a regulatory hurdle just to overcome in Dubai, and obviously third-party reliance on kind of the launch of the card program, and some enablers with some banks in Canada just before I can, fully commit to those numbers. So you can understand I've got to be a little bit cautious, but I would say as of today, we're optimistic, very optimistic. And expect to deliver significant growth, notwithstanding some of those hurdles that we've yet to come. I will say that once we do overcome those hurdles, we may take the opportunity to invest further, given the great kind of learnings we've taken over the last year with those pipeline builds that we've had ahead of launch. So effectively, as of today, extremely positive. Already mentioned the 2025 strong start that we've had, which has kind of reaffirmed that positive view, and kind of watch the space for more news flow.
Yeah, and I'm guessing all that strong growth is going to be self-funded, the organic side, that's for sure.
That's exactly correct, Paul. Yeah, a real strength of ours over the last couple of years is delivering the growth and the kind of future-proofing from our own balance sheet, and that's what we expect to continue.
Brilliant. Okay, then just to sort of close, James, I don't suppose there's any sort of closing remarks for investors for the next 12 months ahead, how you feel and what the sort of the demand pipeline is, and just general sort of directional comments.
Yeah, absolutely. Excuse me. Obviously, we've got a clear strategy that I think we're executing on. I believe we've got the people, the platform, and now the product to deliver on that strategy. We are investing, as Judy mentioned, through our own resources, and therefore there's no plan for any dilutive action so shareholders don't need to worry about that. And obviously we remain cash flow positive, which is critical. So, at the outset when I started, the focus was on two things: revenue and cost control. That still remains. Let me be clear about that. So, we're not about to go and spend millions of pounds on a marketing campaign that we don't know what's going to happen. We're tightly managing the costs whilst very much focusing on the revenue, and that will be the theme throughout 2025, whilst we make the assets that we've paid for sweat even harder. So, and particularly on an international basis, we're going to be focusing on making sure that Dubai and Canada are firing on all cylinders. We're making sure that the card program is performing to the best of its ability, and making sure that we're acquiring customers at pace. And which ultimately, is both turnover and revenue through the hopper. One thing that I haven't mentioned actually is we signed a key agency banking agreement with a very well-known bank, which ultimately gives us effectively enables us to partake more in, certainly in the UK banking realm, much more integrated into the UK banking system. So ultimately we're able to leverage the faster payments network, etc. We have our own SWIFT code. We generate account numbers, IBANs for customers. It's the next level up, if you like. And it just shows and is a testament to how the business has grown up, and how we're perceived, certainly by other financial institutions, and particularly banks. So I think that's a really, really positive message to tell investors and potential investors. Ultimately, these aren't the deals like this and arrangements like this aren't given out lightly. They really aren't. There's a huge amount of DD that goes into it by the banking counterpart, and I'm delighted to say that we, after a huge amount of work, but we got through it, and we've signed that agreement, which I'm really, really pleased about.
Yeah, well, really well done there, guys. Marvelous endorsement is that one, that's for sure. Okay, well, thanks very much again, and I guess the prelims are going to be sometime in April. Is that right, Judy?
That's correct. Yeah, the full year annual report, April. Yeah.
Okay, well, thanks a lot for your great insights there, and look forward in touching base in a few months' time.
Thanks, Paul. Cheers. Take care.